friends, very good morning. Welcome to another interesting video of FX Yogi. In today's video, let's learn about investing your Bitcoin, ICOs. An ICO or initial coin offering is an alternative form of crowdfunding that many blockchain startups have been utilizing as of late. Instead of donating in US dollars in return for shares of the company, patrons can donate in Bitcoin or other cryptocurrencies in exchange for new tokens of the company. The most famous ICO thus far was the Ethereum ICO of July 2014. Ethereum is a new blockchain-based platform that allows applications and automatically executed contracts known as smart contracts to be built on it. During the funding phase, Ethereum received roughly 31,500 Bitcoin, equivalent to $18.4 million at the time. In return, a total of 60 million Ethereum tokens were distributed to those who were part of the funding. The project has been extremely successful in the short term, and today 60 million Ethereum is worth approximately $24 billion. ICOs represent a way for companies to fund their blockchain projects, in addition to providing returns for investors. Usually, the offerings last for a period of a few weeks, and the company issuing the new tokens will have a goal amount that they aim to raise. ICOs have rapidly increased in popularity in the past 18 months, and 2017 is on track to be the first year that blockchain companies raise more money from ICOs than they do from traditional venture capitalists. For an investment purpose, ICOs represent a way for savvy investors to get in on the ground floor of an exciting new project. The downside of this, of course, is that with so many new ICOs popping up, some of them have far less legitimacy than others. If you are planning to invest in an ICO, do so based on the underlying usefulness of the project and not any fancy marketing buzzwords that the company uses in their sales copy. Just because something is based on a blockchain platform does not always mean there is a real world demand for the product or service. Another area to examine is the team of developers behind the project and their track record of successfully developing blockchain applications. Like any traditional startup venture, more ICOs will fail than succeed, and raising money is only part of a successful project. One such example of an ICO with problems is Banker, or ICO based on the idea of creating a market-making, generating an automatic buy and sell price product that provides liquidity for digital assets. The project raised a staggering $153 million in just 3 hours, over 50% higher than the initial target. However, the project had problems with investors' transactions being accepted, in addition to the Banker team issuing extra tokens after the funding period was complete. This ultimately means lower returns for investors. Like any investment, it is important to do your due diligence before becoming involved and never invest more than you can afford to lose. One final word, like anything in the Bitcoin or cryptocurrency space, ICOs are not a get-rich-quick scheme. Lately, the ICO buzz has been so intense that there are even ICOs utilizing Facebook ads and celebrity endorsements in an attempt to gain investment. It's worth asking yourself if you would invest in a non-blockchain company based on a Facebook advertisement, and I think you already know the answer. If a company's main selling point is amazing returns rather than technological innovation, then it's likely to be a subpar investment rather than a solid one. The other area that is vital to understand is that you are not buying stock in these companies during the ICO phase. You don't own any of the company, you simply own whatever token they denominate, which will fluctuate in value due to external factors that go beyond the company's own performance. That's all for today. Let's catch up in the next video with more interesting content. Until then, take care, stay safe, bye bye.